So in the last week, as we have discussed, that markets we are expecting to be a rebound right from around 11,950, 12,000 levels, and we have seen that momentum coming back as we expected the target of around 12,240. So it was there on the target side. But what the last week development is, we have seen major global markets trading in a range bound, and even after the gap of opening, we have seen S&P trading in a narrow range day. What's most important is for the bulls is that the US markets and European markets are trading at all-time high, and we have seen that the weekly close on the Dow Jones is on the positive side and at all-time high, which is a sign of very bullish momentum. And even if you look at the DAX, it's been trading at all-time high, and we have seen that the major resistance of 13,600 has been breached now, and markets been trading at nearly all-time highs. Most importantly, we look at the Asian markets. We are slowly and steady following up with the developed markets like Dow Jones and DAX. Kospi is the one index one should look at clearly. It's trading in the 4 months range, and the last week close was around 2246, and about 2280. We are expecting this index to take a major positive momentum and breaking out of the range, and from there we are expecting at least 8 to 10% upside momentum on Kospi. Indian markets, we are expecting, yes, the all-time high can be soon tested with the global markets trading on the higher side. The only concern or the dark cloud cover for equity or global markets is the coronavirus. So we have seen another Chinese state which has seen another 2000 toll of Chinese coronavirus being impacted, and out of 100 death has been already declared. So this dark cloud would continue to hover above the global indices, but out of that we think with the global the Dow and DAX convincingly moving about the all-time highs, we might follow soon, and even Kospi is the indices where we think might see a good upside momentum. On the last week in Indian market, we have seen slight profit booking coming out of the mid cap and small cap indices, which was down 2% and 1.5% respectively. Bank Nifty slightly underperformed last week with Nifty positive 1.2%, 0.12%, and Bank Nifty nearly 1% down. So, but overall, we still there's a bullish structure on the Nifty and Bank Nifty, and in case any dip towards 12,000, 11,950 can be a good entry point for Nifty again. And we are expecting probably by mid March we might see new all-time high on the Nifty, and even Bank Nifty around 30,500 sends out to be a very strong support. So in case it dips to around 30,300, 30,500 zone, take a long bet. Again, we are expecting back to momentum towards 31,500 into this week or probably the next week. Targets we are expecting on the Bank Nifty. On the sector performance, if we look at IT stood out again, straight third week on the positive side, and which was again the leader in sectoral space with nearly 1% gain. PSU index continued to drag lower, followed by metals and realty. We still suggest avoid PSUs. Still, the concern over the growth is there. NPAs, GNPAs, all stuffs are slightly negative on the PSU side, but we still continue to maintain our buy ratings on the private banks over the PSU's bank. Still, if you look at the SBI, the father of the PSU, we still think that over ICICI and Axis, or maybe probably Kotak Bank, HDFC Bank, SBI stands out to be slightly underperformer for us, and we still hold our bullish stance on the private banks over the PSU's bank. Major concern, if you look at just a scenario over the mutual fund flows into the equity, the December quarter has nearly seen 50% reduction, which is around 12,000 crores, versus the September quarter of 24,000 crores. We think we generally look at the historical move. Mutual fund stands the GFM, which is the last quarter of financial year, stands out to be slightly positive on the inflows due to the tax savings and some other policies. But we are expecting again back to this flow might come back to around 18 to 20,000 crores in this JFM quarter. So which you might see some flows into the market again, and we are expecting markets to test all-time highs soon. So for this week, one should clearly look at the buy on Nifty, buy on dip strategy around 11,950 12,000 levels on the Nifty to look for entry point of. And if you look at the bank Nifty, we are expecting 30,300 30,500 as a good entry point, and we are expecting back targets of around 31,500 on the positive side. One sector which could lead, I would say not sector, but one could the stock which could lead the sector is the Reliance, and we have seen strong comeback right from 200 days average. Index stock has seen a V-shaped recovery, and probably gaining some strong momentum, nearly now 1500 from sub 1400 levels. So if I just look at the percentage term, it was around 19% from its recent low up. So we are expecting this to test new all-time high soon, and which can take index towards the new all-time high. If I just look at the sector results last week, some metals, SAIL, ONGC slightly disappointed on the numbers. But if I just look at the cement space has given come out with a strong positive numbers. So one should clearly look for cement space. We think the time for cement space is there now, and cement can shout out that apna time aayega. So one should clearly look for the cement space for next 1 to 2 months, and we are expecting Shri Cement and SEC to be a strong outperformer in the cement space.